Hey, good morning everyone, Mike the CPA here. In today's video, I'm going to explore with you why the stock market has been moving upward. Have you noticed it? I've noticed it. It's some of the largest gains we've seen since April of this year. So why is that happening? When I started to look into this, you start to wonder, did Wall Street already predict who the president was going to be? Let's explore some of these details as we dive into this video and see why, if Wall Street thinks Biden's the winner, why the stock market would be moving upward. If you're checking out the channel for the first time today, welcome. On this channel, we cover finances, investing, and taxes. And if you want to support the work I do here, you can simply do so by dropping a like, leaving a comment below, and subscribing for upcoming future videos. All right, let's dive in. Now, of course, as you guys can imagine, I was following the election, but more so, I was following the markets and the moves in the markets shortly after election night. If you notice, there was some significant gains in the markets, and so I started to wonder what's going on there and who did Wall Street think was going to win. So as I started to look into it, I'm like, I think they think Biden's going to win. And sure enough, the election was finally called out for Biden. So what are some of the contributing factors from my research that I found? And these are the things I want to share with you guys. I'd love for you to weigh in the comment section, engage in those comments. Let me know what you think of why the market's moving upward and what it means for investors. So feel free to share your thoughts as we discuss this. The first factor is a divided government. So Wall Street, believe it or not, they actually view that as a positive thing. And this is a Yahoo article, by the way, and I can link many of these articles down in the description section of this video. What they're saying is, according to a number of analysts, traders ascribed more importance to the fact that a divided government was set to be the most likely outcome of the elections, in which no single party would control each of the White House, the Senate, and House of Representatives. Under that major scenario, policy changes would be unlikely to get advanced. And feel free to pause the video if you really want to study this, but looking back at history, looking back in time, if down here and under the area where it says split Congress, you can see if you have a Democratic president and House and Senate are split between the two parties, or almost equally split, then the change in the markets, the average performance in the S&P 500 is fairly positive. So this, of course, is only tracking it for 4 years, but Wall Street does expect to see positive gains with this type of scenario. Once again, because they don't see major policy changes taking effect with the division in our government and our country. And what that could mean, and I think some of the policies they're discussing really and talking about, is one of them is with taxes, and some of the things Biden proposed in his tax plan may or may not get passed. So we have to wait and see, but that's along the lines, I think, of what they're thinking. So united we stand, divided we fall as a country, but stock market returns are good? No! This machine that is the market seems to have reacted fairly well to the situation that we are currently in, and that seems to be this perception that we'll have a divided Washington, which will mean probably no to low regulatory issues for the big tech firms and the corporate tax issue, which will perhaps fall by the wayside. Now, if you recall, Trump had some major issues with big tech, and he felt they were extremely biased and they had way too much power and discretion over what information is allowed versus disallowed, and what they allow people to see, and who they choose to censor, who they choose to fact check, and whatnot. Trump was going to try to break that up, or at least put some regulations in place to prevent them from overshadowing what people see and what kind of information gets passed along to people. Since that did not happen, what we see next is that, meantime, exchange traders' funds rushed into Invesco's QQQ, which tracks the tech concentrated gauge, adding close to $2.7 billion in the biggest one-day inflow in nearly a month. The fund is on pace for its best year of inflows in 2 decades. So there you have it. With Trump out of the way, then big tech feels like it can go about its merry way, probably with very few to little regulations. All right, guys, check out this chart with me real quick on Invesco's QQQ Trust. This is that technology fund I was talking about. This is just a 5-day chart. Look how much it popped once they determined, or once the Wall Street felt that Biden was going to win. Pop, boom. This is actually a 10-day movement within 10% movement within a 5-day period. So pretty quick gains if you were invested in this fund. So there you have it, ladies and gentlemen. The fear of regulatory issues coming in and attacking big tech, making them potentially modify the way they do business or cutting into their profit margins. With that fear out of the way, investors are feeling a lot more bullish on tech, as you can see just from that one fund, and we'll see how far they have to run under a Biden presidency. Now, will they have the momentum they did over the Trump presidency? Who knows? But either way, I'm sure big tech is very, very happy with this election. Moving on now, it says stocks have reacted favorably to the news events that made a clear Biden win more likely. The story points out two reasons for stock prices to rise when Biden looks more likely to win by a wide margin: reduced risk of the chaos that would be associated with a contested election, and increased odds that we will get another round of robust fiscal support to help the economy grow out of the COVID-driven slump. Now, the key thing here, when I'm reading this, at least in my opinion, is the part about the fiscal support. I think under Biden, Wall Street's like, ooh, he's gonna print some money for us, and he's gonna dish out stimulus to Americans, which will increase spending. It will maybe help businesses, and thus Wall Street would potentially benefit from that.
Mike, let's not forget Biden's stance on global trade, especially with China. If China gets back in the mix, we're talking cheaper goods potentially and cheaper labor for a lot of these companies. When expenses are low, means profits can move higher, something Wall Street absolutely adores.
Chipper, that's a great point. I'm really glad you brought that up. And I feel that many of the CEOs who run these large companies in the US who operate globally feel that way. It was Box CEO Aaron Levy, who, however you say that, who tweeted Saturday after Biden emerged as the victor in the presidential race. He said, "This is great for American competitiveness. While there's nothing magical Biden can do, that's the point. Businesses need market stability, global trade relations that don't change on a whim, talent from everywhere, long-range planning, and a lack of constant distractions." As Chipper mentioned a moment ago, I think this is once again a chance for businesses who operate globally to reap in the profits from that kind of operation and structure, in one which trade is allowed or there's not as many infringements in place for that trade to be conducted. So it doesn't take a rocket scientist to figure out that these CEOs who operate these large companies are really happy with this, and Wall Street investors are happy with this. Who might not be so happy with this arrangement, in my opinion? Probably the average US worker, if you ask me, depending upon their field of employment. Now, do I know for certain they would lose their job? Absolutely not. This is just a guess, but I would think that if we're operating globally once again, or more global focused, then these CEOs of these large companies are gonna want to ship a lot of their jobs, as many as they can, for lower cost overseas. Just my opinion, but you weigh in the comments and you let me know what you guys think. Now, before I start to wrap up this video, is the other item I want to mention is interest rates. Interest rates right now are still at historical lows, and under a Biden presidency, I don't see that changing. So if they raise interest rates at all, if the Fed raises interest rates, it would pretty much cripple the housing market even more, and it would definitely impact our national debt, the amount of taxes we have to pay to keep up with it if they raise interest rates. So I don't see that changing under a Biden presidency, and in fact, I believe, I could be wrong, but the last announcement I heard from the Fed is I think interest rates will pretty much stay the same or very little changes to them in far into the future until like 2022 perhaps. That's what I last remember hearing. Correct me if I'm wrong. The low interest rate environment will keep asset prices inflated, which I do expect that to continue to be the case. For me personally though, I think the biggest factor in determining where the stock market's going from here is I think our country, we have to get out of this COVID situation. And we got to make sure our numbers are good. If we look over at the other part of the world, there's lockdown starting to happen once again. And we have to do everything we can to prevent that, in my opinion, here in America. Basically open everything back up. And I know we've opened a lot of things back up. We have this modified lifestyle now in 2020. But until we can fully open everything and take off the mask, then once that happens, or whenever that happens, I think at that point our economy can really start to get back on track. More than anything, I think it's fixing that is going to get our economy on track more than any other factor we discussed here today. Now, you might be feeling that, I need to really just rearrange or just modify my portfolio altogether. I got to change my investment strategy. Actually, most people and experts say not to do that. For the most part, you should probably just continue the course you're on, but look closely at what Biden's planned or proposed policies point to in terms of what sectors of the economy it might affect. So, for example, like his policies, he's going to probably go push things towards being more green, right? So he's probably going to encourage people to move away from oil. So I think oil industry is going to be affected by it. This is just my opinion. And I also think as we talked about big tech being more bullish on big tech, I think tech is going to continue its run. That's just my opinion as well. Do your own research, of course. All right, you guys have been a wonderful audience as always. I love seeing your comments, so please leave those comments down in the comment section. Let me know what you think will happen with the market with Biden in office. Do you think that there will be significant policy changes, very little with a split Congress and all that? Let me know in the comments below, and I look forward to reading them. Until then, I hope you all have a wonderful week. Stay safe. Most importantly, always live life uncaged. Peace.